Friday, February 10th, I am caffeinated. If you haven't, go to your Starbucks, get a free cup of coffee. Now, mine took a hell of a long time. Mr. Nichols, you have a lot to do. Mr. Brian Nichols is the new CEO of Starbucks. We waited for a good half hour for a black cup of coffee that was ordered on the app. So there were 9 people working in this, and they were super, super hard working, with one person apologizing to all the customers. So it was a good one. Posted about it on Twitter. Maybe they'll write me back. I don't know. But again, free cup of coffee for those people that stayed up for the Super Bowl last night. I was rather happy for Saquon. I am an Eagles hater because I'm a Giants fan, but I still love Saquon. So congratulations, Saquon. My wish would have been that Saquon would have won the MVP award, but he didn't. We're going to go over a lot today. Risk tolerance, we're going to talk about that. We're going to talk about the gold play that I gave paid subscribers. Is working out well because gold is up. Why you shouldn't have a bond necessarily if you're in a retiree state or if you want to do. Hey, there's going to be additional AI spending. We'll go over that. What does Shay think is going to be the spend? Amazon with its earnings and pullback, strong buy in the quant. DraftKings for February, 100% win rate. The Weinstein analysis on Trendspider. You know, I like gaps. We're going to look at gaps. Love a thread from Dan Niles and the earnings. And then a little fire tip that I'm going to give to the paid subscribers. So FIRE is financial independence, retire early. Those of you that may not know, I retired at the age of 49. And my plan wasn't to work. My plan was to just take out my savings that I managed to make and maybe trade a little bit. I do make a lot more money trading than I do on the podcast, but the podcast provides me some great things about emails every day from folks about how I change their lives, how I do good things. And remember, this podcast isn't about, hey, get this stock at this price. Get this stock at this price is part of it. Well, my thoughts on the market. The market doesn't care what anybody says. So I don't care who's giving you a price. It shouldn't matter to you. What should matter to you is how you look at the stock. That's what I want to teach you, is how do you get a stock that somebody says, oh my God, this one's going to explode. Well, I'm the guy who sold Palantir at 25 and it's at 120 now. Palantir right now is at 112. It got up to like 120, something like that. Again, I'm the guy that sold at 25, but it's in the core portfolio and I have exposure through ETFs for it. So my style is not going to match your style of investing. It's about teaching you about things. Where are we on QQQ? Well, the all-time high, if we just go here to Seeking Alpha and we look up QQQ, one of the things I like to look at are these little bar sliders, okay? Where are we? Well, the 52-week range is between 413 and 539. If you bought at 413, great. If you bought at 539, it depends on where your timeline is. If your timeline is only the next 2 weeks, maybe buying at 539 wasn't the right thing at the 52-week high. Where you're trading right now at 527. Does it make sense? If your timeline is between 5 and 10 years, any time you buy is going to be a good time. Time in the market beats timing the market, okay? You want to pull out. This 4-hour algorithm is fantastic. 20 positions over the last 24 months, okay? 20. Just so happens that 1, 2, 3, 4, 5 of them came since November, okay? But time in the market beats timing the market. This 504 at November 6th may not have seemed good because it got you out with a 1% loss. But in my mind, that's a good entry because right now you're trading at 527. If you pull out, you can see that green line that was there. That is a trend line. Make sure your trend lines touch 3 points. Any more points, and that adds to validity. And so if you look at this, August 5th, it pulled back to that trend line. Doesn't mean that you don't buy up here because look at this this is a weekly chart. Okay? Time in the market beats timing the market. The MACD right now on the weekly looks high. The RSI is at 59. It's in no man's land. Doesn't mean you don't buy. Just means, hey, what's your time horizon? What's your risk tolerance? You can take a look at VOO. It's very, very similar. On a, look, you've had one at 553, had one at 549. I use the 4-hour algorithm to find my entries on these ETFs. It doesn't beat buy and hold, but it gives you the solace that, hey, the technicals just told me to get in. If you want this 4-hour algorithm, what's great, I won't give it to you if you sign up for Trendspider on this weekly 2-week, but go and get Trendspider. You're going to see me talk about the Weinstein analysis. You're going to see me talk about the seasonality. You're going to see me talk about all of that. Go and sign up for any of these plans for a 2-week trial. Okay, it's $20. $20. Go and sign up. Use the link tree, linktr.ee/dailystockpick. It's down below. Just go and sign up. Then you can import some of the Weinstein analysis, some of the custom indicators. You can try it. You can't use my tools because I require you to sign up for a yearly plan in order to get my tools. But it doesn't mean that you can't try these things. Okay, go and develop your own strategy. My strategy, the strategy that I use is based on the MACD. It uses moving averages. Go and develop one. Okay, and then test it. You'll see this performance chart back here. That's what it provides you. Okay, because everybody has a different risk tolerance. And let's talk about that. Because this guy on Reddit, he says, I finally received the coveted, what the fuck are you doing letter from Fidelity. What is that? This dude lost $308,000. Last month, he executed 3,385 trades. And essentially, Fidelity sends you this, what the F are you doing? It doesn't mean that he's, losing money or doing anything horribly. It just means that maybe his risk tolerance is a little bit bigger than most. And yeah, I'm not doing 3,385 trades to lose $308,000. But I don't have the account that this guy does. Maybe he's got $10 million in the bank. Maybe he's only got $1 million and he's down 30%. But maybe his risk tolerance, will stand that. We all have different risk tolerances. We're all different. We're not in the market for the same exact thing. That's what you have to realize. So find yours. Okay. Gold hits record high as Trump announces aluminum tariffs. I gave the paid members a gold play 2 weeks ago. It's up 5% in pre-market. If you want to join the paid subscribers, go down here. Remember, my newsletter is absolutely free during the week. Okay, I will work on, there are 3 paid newsletters that are in the work. I may take a couple of days off this week to try and work on those because I've been sticking to my plan of working only 5 days a week in the new year, not 6. So it's getting hard for me. It's getting hard. But gold is a play. Why? Because inflation will go up with tariffs. It will. And so as he threatens tariffs, you're going to see the price of gold move up. Okay, there are other things that you can invest in as well. Go and find them. Use Seeking Alpha Premium to find these things. And I'm telling you, Seeking Alpha Premium is so good. You can get $30 off your premium membership using Linktree. Okay, it's the 3rd link down there. You can get a free 7-day trial. But I steer people towards this premium. Okay, premium includes alpha picks. It's not just, hey, if you want to do your own research, get the premium, get the $30 off, get the free 7-day trial. But I want you to include this alpha picks portfolio because the portfolio is a fantastic portfolio. You get free 60 days of Seeking Alpha Premium when you buy alpha picks through my link. Okay? So if you want the bundle, go and save the money. It's going to be cheaper for you to get the bundle. But if you're not sure if you want Seeking Alpha Premium, but you do want alpha picks, why maybe you want alpha picks? Well, look at the performance, 177% versus 58%. It is buying on the 1st and the 15th of each month, a new stock on the 1st and the 15th of each month, and they tell you when to sell. It's so simple. And they tell you what percentage of the portfolio you buy into when you get access to the portfolio. So it's nice and simple, nice and easy. So easy. Again, gold, I think, does it. But if you want a portfolio that's proven, go and get that portfolio. It is so good. Year to date, I don't know, it's up like 6-7%, somewhere in that neighborhood. Now, if you've listened to me for a while, you know why I never talk about bonds. Why don't I talk about bonds? I haven't had success with bonds over my almost 40 years of investing. Bonds just, I always heard from financial advisors, you need bonds, you need a 60-40 portfolio. It just hasn't worked for me. And so this high yield investor, investing group leader, why retirees don't need a bond allocation. I thought it was a great advice. Now, I will tell you, I don't even use them for my parents' portfolio. My parents are in the 80s and I manage their portfolio. I don't even use bonds for them. Okay, I don't. I just haven't seen the need for bonds. Now, it does protect you in a downturn. Again, everybody is different. But I absolutely do not believe in bonds right now. I just don't. I don't. And I may be wrong. 100% I may be wrong. But my risk tolerance is within stocks. Now, let's talk about this. I don't think this can be understated. AI is still the dominant theme in the market. Find a stock, CRDO, Credo, or CLS, which are top stocks, which are also, I don't think Credo is an alpha pick, but CLS is, Celestica. Okay, Ogus, hyperscalers will spend $322 billion in CapEx this year. Amazon just announced $97 billion. Microsoft announced $85 billion. Google announced $75 billion. Meta, $65 billion. Over 90% of this money will go to AI infrastructure. He thinks it's bullish for NVIDIA and AMD. I own NVIDIA. Okay, we can go and look at the NVIDIA chart. They report later this month. I think it's February 22nd, somewhere in that neighborhood, 26th. Okay, algorithm got you in at 127. Okay, look down here at this performance chart because the left number, 303%, that's how much you make if you buy and sell based on the 4-hour algorithm. The 563% is if you bought and held for the last 24 months. 303% for 24 months. You traded 21 times. Again, since November, 1, 2, 3, 4, 5. Okay, it wasn't a lot. All of these are down, but I would argue what's been happening since November is this just capitulation right here, and the MACD is resetting and going down. The RSI is in no man's land at 50. What happened the last time it was at 50? You were trading at $43 at the high. Okay, that was the last time it was at 50. Well, September, it may have been 50 here. The high, 116. You're trading at 129. That 140 is resistance. So this MACD going down, the RSI going down while you're just leveling off. The last time that happened was here in July of 2023. The stock was trading at 40 and it didn't get out of the 40s until January 2024. So it's going to take a long time. As long as they continue to put the profits and as long as that again, how much of this is being spent on NVIDIA? They are sold out this year. They have pricing power. AI is continuing to be a theme in this market. The other chip that I own is Broadcom. And Broadcom, very similarly, you can see this hasn't been the 184 hasn't been tested as support. Okay, but you're under the 50-day. The last time you were under the 50-day was December. Where was it trading? 160. Where are you trading right now? 224. Again, the Broadcom CEO came out and said, hey, but look, the MACD hasn't reset on this one. We may have a very sideways trade going into June. It may be out till June. But again, I believe in this stock. There's another one that I own, Credo. This is the top stock for 2025 from Seeking Alpha. That's part of the premium package to get that. Okay, look at this one. The algorithm got you at 71. Where are you trading right now? 77. Pre-market is at 79. It's up 2%. Look at the MACD. It dipped down here below the oscillator. This is the 4-hour. Go out to the weekly, and we're still stretched. So we may just be seeing a sideways trade. Look at this one in December 2023. Okay, it was trading up here. The high was $20. It didn't get above 20 until May 27th of the next year. So you may have a long sideways trade. But then you go over here and let's look at NVIDIA. Okay, we're going to look at these three stocks again. The valuation, bit stretched. It's a hold in the quant. Wall Street says it's a $172 stock. That's a 32% upside from where you're trading today. We can go to AVGO. Again, same exact thing. Valuation is NEF. The Wall Street price target, 243. That's a 8% upside. Credo, in fact, is a strong buy in the quant, and it only has a $79 price target. Okay, but there's only 13 analysts that cover this one. And Wall Street says it's a buy. 7 have it as a strong buy. Okay? Again, pick your winners, but AI should be a theme in your portfolio. The complete playbook for the new Mag 7 driving AI's next platform. Again, NVIDIA, this is Shay Bular. I respect him a ton. NVIDIA, Taiwan Semi, ASML, which is Applied Materials, Google, Microsoft, Amazon, and Meta. And he goes over his elevator pitch for all of the ones driving this. Okay? MongoDB, the data cloud, data. Final thoughts. AI economy is no longer defined by abstract potential. It is manifesting in real world development. This is a great thread. Want to find new AI picks? Go and look at Twitter. It is one of the tools that I use. Now, one of the ones that I love that's leading AI, it's Amazon. They just reported earnings. Okay? But when I go over here to Amazon in the in Seeking Alpha, okay? It's up 0.8%. When I look at it, it just moved to a strong buy in the quant after their earnings. They pulled back under 230. I had said I like this stock at 220 versus 240 heading into earnings. It pulled back to 220. You have the chance to buy it under 230. I think you can. It's ranked number 1 out of 28 in broadline retail, and it just moved to strong buy. Yes, the valuation is a bit stretched, but their PEG ratio, which includes growth, that's a big one. Again, what I would suggest you do is go to, here in Seeking Alpha, get the 7-day trial, okay? Type in Video Hub. Okay, you get this Video Hub here. Go and watch this man, Steve Kress, use the Seeking Alpha platform. He basically goes through everything. He takes you through his screen for any of this. This is the top 2025 stocks. He's going to have a webinar, I think it's today or tomorrow, on the top 2025 AI power stocks. Okay, this is why you sign up using my link. You can sign up for the bundle right here, or you can sign up for the free 7-day trial. The bundle, you save $159. With the free 7-day trial, you save $30. Now, if you want Seeking Alpha and 60 days for free of Seeking Alpha Premium, you can get it. But again, go and watch one of these videos if you get the free trial, because he shows you how great the platform is. So Amazon, for me, it's a good one. Now, what about the next one? Well, look, DraftKings, you can use Trendspider to find the seasonality of these stocks. February, it's 100% return. Look at that. Over the last 6 years, February for DraftKings is up 6+ years. You want to know why? The Super Bowl. The betting on the Super Bowl. An average return of 11.45%. Let's look at DraftKings. So you can go over here, DKNG right there, and we can look. Where did January start? Well, here, you had a nice little dip on February, the February 4th. Okay, it got down to the 200-day, down at $39. You're trading at 42. Is it crazy to think that this one could continue to go? No. You are seeing right here a nice little resistance that was resistant, didn't hold. Is it holding now? Well, let's see. Last week's low was $40.07. Or I'm sorry, 2 weeks ago, $40.07. Then this low, $39.75. So it doesn't provide a great look at it, But again, if you're looking at the week of January 27th, it closed at 41.95. So February might be a good time to bet into this one, because when we look at the seasonality and we look at a monthly, and we're going to pull this back to the last 6 years, okay? Because I think that's just when it IPO'd. You can see 100%. Where's the mean? 11.45%. Maybe that's one you want to look at. Again, you can do all of this on your own. You can scan for everything that you need. So I like this one. I like, using the seasonality a lot. And then DraftKings, sports bettors, stocks due for a slump. Look at the daily. Okay. That's just a channel that they drew. Is it in the bottom half and then ready to explode to the up half? Well, maybe, because we can go back to the daily. Look, that's clear. That's an upward trend. That's the 21-day crossing the 50-day. Okay. The 200-day is down at the bottom of the Bollinger Bands. They're a little bit cinched up, but you're trading up there. It's not a bad one. The MACD right around the oscillator. The RSI bit stretched to 58. Not crazy to think that it could pump up here to 45. That'd be a nice move from 42. In pre-market, let's see. Pre-market, you are up 0.52 at 42.50. It's a good opportunity. Again, follow Trendspider on Twitter. Now, this Weissman stage, this is a great one. This is Weissman analysis. And if you don't know about Weissman analysis, you can read about it here. I'll include this in the newsletter, Master Trends with AI-powered Weinstein stage analysis. You can literally import this into your setup right here. Before we go into the build, let's get you equipped with the Weinstein stage analysis indicator. It colors, okay? Stage 1, accumulation. Stage 2, advancing. Stage 3, distribution. Stage 4, declining. Where are we in Microsoft? Well, maybe this is, stage 4. And what's stage 4? Stage 4 is declining. That's what's happening in Microsoft? Are we going to move from a yellow to a red? And you can see the red right there. And then it turns green. Maybe that's a declining revenue in Microsoft because OpenAI may be losing to open source. That might be it. Well, what about QQQ? What's interesting about this one is this is a strategy using the Weinstein analysis, okay? Over the last 10 years, and using the Weinstein analysis, when you're in those stages, over the last 10 years, 87% return on QQQ. Max drawdown was 14%. Risk reward ratio, 3.59. Go and build this strategy. And this is the Weinstein analysis. Again, back testing the Weinstein analysis right there. Entry, stage 2. Exit, stage 3. You can build this in Trendspider using a very simple language. Okay? Import this into your setup. Go and test it out on one of your workspaces. And again, remember, signing up for Trendspider, $20. Go and try it. Go and try it. You can sign up 14 days. You can get a free training. Go and sign up for a free 14 days, and then they'll train you. Go and do it. It's one of those tools. It's one of the 3 tools that I absolutely use every day to manage my portfolio. Now, one of the other things, you guys know, I like gaps. Like old men at the pool with their swim trunks on. Gaps are great. And we can go and look at this, okay? Here are a few setups on our radar in the NYSE. They do a power gap. They use the dashboard. And these are power gappers. Perfect timing for power gap setups. LNC. Let's go and look at LNC. Just pull it up here. And we'll look at LNC. Okay? This is Lincoln National Corporation. Is this one a good one? Well, let's see. In pre-market, it's even. It's probably not my thing. We can go over to Seeking Alpha. What's LNC? Let's go and see. Use the tools that we have. I don't even know. Quant, hold. Wall Street says it's a hold. Wall Street says it's $36 price target. I don't think it's one that I would want. This is a financial, life and health insurance. Health insurance has gone up. If we look at this one over, let's see, the last 1 month, it's up 15%. The last 5 days, it's up 10%. Maybe one you want to look at. If we look at a weekly chart of this one, looks like it might be heading towards that 200-day, which is 42. You got a positive moving 50-day. Might be an interesting one. Let's look at this one, TPX. Okay, these are scans that you could do on your own. Tempur Sealy. This is mattresses. Okay, for me, 4 hour, it got you in here at 56. This one's at 64 right now. Looks like it's a bit extended to me, but look at that. I mean, weekly, you're seeing it on the top of the Bollinger Bands. Would I want to do this? No. Go and find these things, follow Trendspider, get my 4 hour algorithm. You can do all of that. Now, maybe you just want to, read something from a guy who's a hedge fund manager, Dan Niles. This is a genius. Okay, this is just genius. I had concerns over the Mag 7 to start the year. The 6 that have reported have had revenue estimates revised lower for the March quarter. The 3 hyperscalers all had cloud revenues missed, albeit slight for Amazon. Eventually, return on investment and cash flow matter. Okay, he points out Oracle, fantastic. AI CapEx spending. He points out NVIDIA, the poster child for the AI trade, which reports later this month, will be interesting. Nobody knows what's going to happen. Networking and getting access to data centers. He brings up Cisco and ADTN. Banks, the KWeb is another top 5, KBWB is another top 5 pick for 2025. Midcaps, IJJ. He points all this out. So you just use your tools. I mean, let's go KBWB. KBWB, it's not one that I would normally do. This is the Invesco Bank Index. Look at that. Algorithm got you in here at 63. Gaps up. What was that? January 15th. I don't know what the hell happened January 15th. But you can see, is the MACD extended? Not as much as it was here. Back when it was trading at, let's see, 70. Trading at 71. Could be going for another move higher. If we look at the weekly on this one, you're in the upper end of the Bollinger Band. Is it one you want? KBWB, not bad. Let's go and look at Seeking Alpha. KBWB right here. It's a buy in the quant. It's not expensive. Momentum's great. Expenses B, dividend. But Dan said this KWB, the bank ETF, is another top 5 pick for 2025. Might fit your thing. Use the tools that you're going to have. Okay? And earnings will drive stocks. This is Monday, Monday.com. It's up 25% in pre-market. Okay? MNDY. Let's go and look at it. This is one I think D-Man has in his portfolio. So kudos, D-Man. Trading under the 200-day, which is the red line. You got a gap up here between 302 and 320. Where is it trading right now? 320. We just talked about gaps. And gap fills. 320 is where it's trading. Could I have told that? Yep. If I had a gap scanner, could have told you. Now, this one down here could have been a gap too. I mean, it's just whichever you believe. But again, with good earnings, they pointed out AI. Plans to double down on AI efforts. Well, what's the theme? It's AI. If I had to flip a coin and tell you which gap was going to get filled, it was the 1 to 320. And if we go and look at a weekly chart of this, you were trading right at the 50-day. And where's this one on the previous earnings? It's right at 320. Took a little tumble down. MACD reset, RSI reset. And boom, you have good earnings. Software is a play. So, social requests. I'm going to do a fire tip for the paid subs. Remember, it's going to be more about financial independence, retire early. I did retire early. I think there's some tips that I can help you with. And this one has to do with about saving for retirement. So I'm going to put that in the paid newsletter. It's just a little blurb, but it will be in the paid newsletter. If you're interested, it's going to be in the newsletter. I'll put it behind a paywall. Now let's talk about some of the social requests. Hey, Gary, would love to see how BSY does on your 4-hour algorithm. What is BSY? Let's look at BSY. This is Bentley Systems Incorporated. Let's look at BSY here first. Let's go over some of the fundamentals on BSY. Bentley Incorporated, BSY. It's an F on valuation. Why? It's expensive. Their PEG ratio, even the forward PEG ratio at 3.26, their growth might not justify that valuation. Now, you look at the revenue growth, 9%. It's good, but you look at the revenue on growth going forward, minus 18%. CapEx growth, minus 40%. A little bit of bad momentum, 3 month, it's down 10%. 6 months, down 2%. 9 months, down 16%. I will tell you, the 4-hour algorithm will not do great on a stock that's going down. And you look at this, see the weekly, how it's going down here? It's a downward trending stock. It should keep you out of downward. But again, it doesn't do great. Minus 20% versus 17% buy and hold gain over 24 months. And part of the reason is because you don't even, you just started having this 200 day. I would look to this one to trade around 47. I see right here, what I see on this chart is that this 42 might provide you some, see how it's resistance right here for the couple of weeks, and see how August 5th, that was the Japan unwind trade. What's the low? 43. 43 might be a good stop loss for you if you're trading at 45 right now. Might be good. They have earnings coming up February 24th, but 4-hour algorithm doesn't work. Maybe the 65-minute algorithm works, okay? You have to find a strategy that works for you. This one doesn't work either. So maybe the 1-hour stock battle, because we did a stock battle. Does this one work? Loses you 5% over the last 65 days. I would argue it's probably just not a good stock. And why would I argue it's not a good stock? Well, look at Wall Street says it's a buy. They have a $56 price target. There's 15 analysts that cover it. 7 out of a strong buy. But when you look at the last 90 days, they're taking their estimates down. That's never good for a stock. It's up 1.49%. This is an application software information technology. It's a $14 billion market cap. I don't like small caps. This would be considered probably a medium cap stock. They just appointed a new COO. This one doesn't excite me. The 4-hour algorithm doesn't excite me. Would it be one that I'm in? No. I think there's better opportunities out there. And one like that probably isn't one. What's interesting to me is it appears to be stuck in a range ever since July 2023. I think your algorithm should kill it trading. It doesn't always work. And if you look at this one, I think that because it just came out like in 2020, it just doesn't have a lot of weekly candles here for me to say. It does trade on this one. If you believe that, I'm sorry. I'm not going to do, I want this particular one. If you believe that it is in this range right here, and you believe that top one, I'm just going to move this so that, and we just started the Monday candle. I'm going to move this over to this beginning. Okay, where are you looking at? Okay, let's look at that. Because you can see the value area low is right where it's trading at about 47. The value area high is 53. That's a one. But I drew this to say that anything between 46 and 56, maybe you bump back up. Maybe you bump back up. But I don't know. Again, I don't like the financials of this company. So for me, I wouldn't look at it. Jasper, can you look at Crocs? Thanks. Crocs are the crappiest freaking shoes. I like Skechers. To be perfectly honest with you, I like Skechers. Here, 4-hour algorithm, it loses you 12%. Over 24 months, there are 28 positions. You win 36% of the time. Your average win 9%. But is this a stock that I would trade? No. Buying and holding, you lose 21%. So you lose half of what you did if you bought and held. And you look at a weekly on this one, I don't like the way that it's trading. I just don't. It's down below its 200. And then you go ahead and look at some of the fundamentals on this one. A, I don't like the shoes. B, I just, the valuation is great. I mean, it's super, super low. But their growth sucks. Their growth is horrible. Growth is absolutely horrible. Their momentum sucks. Momentum is probably the number one thing. Revisions, everyone's bringing it down. 6 revenues down, 3 earnings per share down, 3 up, 2 down. It's a coin flip. For me, I'd rather look at this ranked in industry. And to be perfectly honest with you, I like Skechers. Now, Skechers hasn't performed as well as some of the other shoes in this. And you can see with earnings, this one tanked down. When you look at Wall Street, their average price target is 80. I like this one, but it's even ranked below Crocs. Crocs is number 7. Skechers is number 8. The reason I like it? Somebody asked me about Birkenstock last week. This is number 3. Okay. But number 1 is Deckers. Number 1 is Deckers, which just took a hit. Okay. The quant says it's a strong buy. Why? The valuation seems to have been reset with the earnings. Still a D, but their PEG ratio is now 0.81 in the hindsight, 2.03. Their growth is the problem. Okay, their growth is the problem. Levered free cash flow, you can see. You can just take a look at this. Now, say you know none of this stuff, go and analyze with AI. Pull up the analyst reports with AI. You can see it. Company description, then you have the competitors, Nike and On Holding. Then you have Deck is rated as strong buy, exhibits strong growth, excellent profitability. When was this one done? Was generated 2.7. So what was that? 3 days ago, right after their earnings? You can see what the valuation challenging with the price to sales of 5.34. You can look at growth are exceptional with revenue growth year over year at 20%, significantly surpassing the sector. Profitability, Deckers showcases outstanding profitability. Deck's momentum is robust with a 1-year performance. You can do all of that. Then you can read what Seeking Alpha analysts say, the positive raised by it and the concerns. This is why I like having these tools. Okay, you can do all of this yourself. I don't like Crocs and I don't like BSY. What do I like? Well, you can find it right here for free. Okay, I give paid newsletter subscribers access to all of my paid portfolios, but Savvy Trader is a place where you can get free access to the stock pick core portfolio. We're just going to sign in here. I didn't sign in. We're going to sign in right here. And this is the core portfolio. Okay. We can just, that's the we're going to go core portfolio right there. And we're going to expand it out. These are stocks that I like. 34 positions. Okay. And you might say, well, it's 34 positions. You're not beating the Qs or look, over the max lifetime of this, 58%, NASDAQ 42%. And this isn't a managed portfolio. It's 100 shares of each stock. Look at the total return. You can see total return, Costco, $53,000. Total return, Meta, $43,000. I just bought 100 stocks of these when I decided, you know what? It's a good company to take a chance on. You can see $32,000 in Goldman Sachs. Now, the number one percentage gainer, I think, is Palantir. And we can go and look at that. That's 513%. But I bought Palantir at $17.85. So it was only $17,000. Oh, I'm sorry, $1,784. So the dollar amount may not seem significant, but it's up 515%. That $1,700 turned into, right now, it's $11,000. $10,984. So this is a great portfolio you can follow for free. The other portfolios I have, the paid members get at free access to them, including the gold play that I talked about. So you can find opportunities in this market. Just go and follow my newsletter. Again, I like to provide you the tools. And the tools are Seeking Alpha Premium, Alpha Picks, which is a portfolio that I have 6 figures into, and Trendspider. And that's it. And Trendspider you can try out for $20. $20, it just makes sense to go and try it out. But you can see the Qs we just opened up and we are up 0.87%. And VOO is up 0.48%. So I like it. There's the show. I will have some stuff for paid members probably today or tomorrow. Enjoy your day. Okay, take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts